That 96,000 people move to Las Vegas every single year. The question is why? Well, due to the Fed's interest rate hikes have increased the cost of living for many Americans across the country. Americans are now looking to relocate to Las Vegas because of no state income tax, low unemployment, low cost of living, and affordability for housing. We're also the entertainment capital of the world. So if you are thinking about relocating to Las Vegas, we would like to offer you a free Southern Nevada market report and a relocation guide. All you have to do is click on that link below to claim yours today. Does your house look like and have you been considering remodeling your home for some time now? Well, if you love real estate like I do and appreciate the attention to detail in the craftsmanship required to build a remodel or a gorgeous home, then I got the perfect company for you. Guys, I highly recommend Design Zone Remodeling. They are a stellar company that will turn your outdated home into your own personal sanctuary. They specialize in bathroom remodels, kitchen remodels, and full house remodels. Design Zone Remodeling has a reputation for excellent workmanship, competitive fees, and being able to offer a wide range of services and deliver the outstanding results to their clients. I use Design Zone Remodeling on my personal properties. Give Design Zone Remodeling at 725-223-0871 or visit their website at designzoneremodeling.com to request a free consultation today.
And projects backed by our 20 years of experience, whether it's a closet, pantry, garage storage, floor coatings, entertainment center, laundry room, home office, custom bookcases, and window coverings, Closets Las Vegas will give you the look and feel you want in your home. Please contact me, Pat, for your free consultation, and don't forget to ask about 0% financing for 18 months. I look forward to working with you.
Is your credit score holding you back from purchasing a home? GC Credit Coaches is a repair company that's made easy. Their goal is to challenge and remove all negative errors that hurt your credit score. On average, GC clients see about 10.2 negative items removed over 4 months. Start improving your credit score today with simple 2-minute online enrollment for a free consultation and a complete credit audit. GC Credit Coaches offers competitive monthly pricing, no contracts, no hidden fees, and the service stops once you are satisfied. GC Credit Coaches removes inquiries, collections, charge-off bankruptcies, and repossessions. Don't forget to visit gccreditcoaches.com.
Attention contractors, remodelers, and homeowners. Is your renovation becoming a pain in the glass? Here at Glass Vegas, we take care of all of your glass needs, from a broken window to custom shower doors, mirrors, winding closures, storefronts, railings, and much more. We can even help you with new or replacement thermally broken windows. We're a full-service, woman-owned glass company that provides unparalleled workmanship, excellent communication, and great customer service. Glass Vegas, we do glass with class.
All right, what's up, everybody? Another day in the fabulous Las Vegas. If this is your first time tuning into this podcast, my name is Chakits Krulsawat, licensed real estate agent out here in Las Vegas, Nevada. So today I have a good friend of mine and also a very special guest, Josh Nieves with Merit Lending. So today we're going to be talking about the mortgage industry and what's going on out here in Las Vegas, Nevada. So we're going to get the inside scoops of what is going on. Josh, how's everything going, buddy?
Chuck, what's up, buddy? Thanks for having me out here today, man.
You know, one thing I've noticed, looks like you're losing some weight, bud.
I lost some weight, but I've been keeping it pretty steady. I'd have to say that I'm on a steady line right now. I haven't really lost or gained any weight in about a year, but right now I have been in healing, so I'm a little thinner than I've been previously because of my shoulder's been healing, so I haven't been hitting it as hard.
Yeah.
Probably put about another 5 to 10 pounds on and some muscle over the next 6 months, but yeah, feeling pretty good.
That's good. So I want to jump right into it, and I think this is a pretty good topic because we haven't had a lender on here for some time, and I want to talk about the mortgage industry and what's like really going on out here in Las Vegas, because about 2-3 years ago, the market was just so hot. Like everybody was just killing it, crushing it, making some money. I feel like the market has softened a little bit. And from your perspective, I want to just ask you, what do you see in the marketplace right now? Of what's going on?
As far as interest rates or buyer pickup or
Let's just start off with the market, housing in general. What's your perspective right now of what's going on?
right now in the market, I think it's a great question. For Las Vegas, Clark County specifically, I seen about the affordable housing increase in listings. I would say that I was tracking like the 350 to 550 range was, about 700, 800 listings. And then it just doubled and then it just went up even more. And when I look at that in the research, like what's causing the inventory to increase, right?
Yeah.
Well, I look at some statistics that interest rates have improved drastically over the last couple of months. So mortgage rates are down. They're the best they've been since September of 2022. Let me say that again. Mortgage rates are the best they've been since September of 2022. Mm-hmm. They're already dropped before that Fed rate meeting next week on September 18th when they announced that they're going to drop the Fed rate. However, getting back to our market, I see affordability housing moving quickly. I see that 500 to 800,000 range moving at about less than 30 days. And then I see anything over about 800,000, maybe up even to a million, 1.5 million, I see that sitting a little bit longer. And I noticed that there's about 150 though closings above 1.8 million this year, which I think is on track for setting a record. So market's really interesting to me. It's healthy, it's balanced, meaning that buyers can really get a great deal in the market. Sellers can really sell their house for a great price. However, there's not really a tipping scale. I think that both buyer and seller really need to work together in this current market. And then the recent disruptor, there's a lot of confusion about, I believe, the buyer agency fees and commission fees for real estate. And I think that, the MLSs and some of the groups have taken positions to have changes done in your guys' business. And obviously I welcome those changes because it's just more disclosure, more information for the consumer. However, I don't think that they've gotten it quite right. I don't think that they've signed the exact order. And so we've got a bunch of people trying to decide what the future is going to look like. And I think that's causing a little bit of disruption right now in the market, which is a perfect storm for buyers to be able to have a great opportunity.
Now, there was a report that I read, probably was like last week or the week before, and they were saying that the refinancing has gone up. Is that true?
Refinance applications are up. We are currently heading into about a 30 to 40% of our pipeline is turning into refis right now. And the refinance boom is here. The train's leaving the station. Rates are dropped. There was trillions of mortgages that were written above 7%. Again, I say trillions. So there's a lot of room for improvement. If anybody has an interest rate above 7%, even 6.75, they really need to reach out to their lender that they worked with or reach out to me as a current lender and look at taking advantages of lowering their interest rate and lowering their payment.
Okay, so what you're saying is if you're about anything above 6, you may want to consider refinancing. So this is going to lead up to my next question. What is the current interest rates right now?
Conventional financing, you're running right about 5.99 with a point. Mm-hmm. You're looking at probably about 6.25, 6.375 with no points. FHA is pricing great. FHA and VA is about 5.5 to 5.625 today in current market. If you get enough seller credit, you might be able to get down to 5.25. So I'm seeing ranges of about 5.25 to 5.99 across all programs right now.
Now you mentioned with points, so 1 basis point. So what does that mean?
That's a great question there, Chakits. So when I say a point, that would be 1% of what your loan amount is. So, i.e., if you have a $300,000 loan amount, your 1 point cost of that for that interest rate would be $3,000.
Okay, so that's actually not that bad. So, how do I know when to actually refinance? When is a good time? So, like, if somebody was at 6.5%, but let's just say rates today are a high like 5s, should I even refinance? Do you know what I mean? Is it worth it?
There are some standards out there for some of the programs like the FHA Streamline or the VA Earl. They're going to want to see a certain amount of reduction done. I think it's a 0.5 point or 0.75 point between the two programs. Typically, I say the best numbers are going to be at 1 point drop. However, I see a lot of benefits for people that can have a 3/4 or more point drop on their interest rate. And then also you have to look at the caveat of how much equity have you gained since you purchased, and will your mortgage insurance go down? So some of that comparison, you might get a bigger savings on your mortgage insurance, but not as much on the interest rate. But the overall savings monthly could really help you out. I've seen somebody that just recently saved $298 a month. I have another lady that's saving $224 a month. And then I actually have a family that is going to save almost $500 a month right now. They just signed today on a refinance. They did do a bank statement loan, Chuck. So, they closed at a higher interest rate, and now they can go full doc with their tax returns. I gave them some great coaching. They took my advice and filed their tax returns in that better fashion these 2 years. And so now they're saving $500 a month from what they bought 2 years ago.
So I want to go to that example that you just made about you just helped somebody out to save $300 a month, okay? Obviously, there's going to be some sort of fees involved, right, when you do a refinance. Is that correct?
Very minimal fees, yes. This certain loan refinance actually has a restriction on it. You cannot go above this certain loan amount from where it started. There's a calculation that's done. So this is an FHA streamline. There's a no income, no appraisal on it. We were able to reduce the title fees and roll it in through a special pricing incentive that we have. We were able to cover the underwriting fee with the interest rate. And the lady, the client was able to come in with $1,900 out of her pocket. She skipped 2 months house payments at $3,200 a month, Chuck. And now is saving $300 a month starting her next house payment.
So basically what you're saying is that at the end of the day, she came out of pocket $1,900. She was able to take the closing costs and roll it over to the loan, which is her loan's going to be a little bit more. However, she only came out of pocket $1,900. So if she's saving $300 more a month, within 6 months, she's got her money back, basically.
Absolutely. Within 2.5 months. I mean,
2.5 months. Well, I thought it was
just because she skipped the 2 months house payments at $3,200 a month. We did put $4,500 onto the loan, or I'd say $4,200. So it's about $6,000 overall. However, that $4,200 was part of her mortgage insurance premium.
Now, here's the thing. What happens if I have an interest rate at 5.5%, but I'm 15 years into my loan? Should I go ahead and refinance at that point to a lower interest rate because I want to save more money, or do I want to start the loan all over again?
It depends where your needs are at, Chuck. It's honestly, if you started 15 years ago on a 30-year loan and you were 15 years into it at, you said 5.5?
Yeah, let's just say. Example purposes.
Right now, you could get into a 15-year loan at 5%, so you could drop it 0.5 point. I don't know if that really makes sense for it. You'd have to really calculate the numbers and see where that is. It might be, depending on what the rate was, you might want to stick on that loan, or if you can, drop a little bit of the rate and go to the 15-year and save a few months. It's not going to be astronomical savings, but it will be a little bit. It really depends on the client. And then there's the other factor. 15 years has gone by. Do you need any rehab? Some people might want to tap into that equity and still keep it on a 15 or a 20, but update their house and, get a little bit of the equity so that they can modernize or keep, their house up to the value and quality that they would like it at. So I would say everything's circumstantial on that. However, most people that are 10, 14 years into a loan, it really has to make sense for them to be able to refinance. And I'm definitely not going to try to put them back in a 30-year loan.
Yeah.
That would be a financial crisis for them. And so I'm going to really look at the term myself. I'm really going to try to keep them as close to that term on track as possible. If there was a benefit that they could pay off a lot of debt and move to a 20-year loan, but eliminate some other, what I call depreciating debt versus appreciating debt. Yeah. That's something that I like to really target on. So that would be, again, case by case on that. So, but great question. I mean, if you're in 15 years and you got 15 years left, definitely don't go back to a 30-year. And there might be some room for improvement on the interest rate depending on what you need to do.
Okay, so we know that Jerome Powell's coming out September 18th. The question I have for you, do you feel that the Feds are going to drop interest rates? And if so, how much do you think they're going to drop it by?
I absolutely do believe that the Feds are going to drop the rate on 9/18. Again, mortgage rates have already dropped. Mortgage rates are not tied to the Fed rate except for home equity line of credits, the second mortgage. That's very much like a credit card that's tied to the equity of your home, or a line of credit that's tied to the equity of your home. to answer your question, I think the Feds are going to drop the interest rate 0.25%. I think that'll actually keep mortgage rates either flat or they potentially will go up a little bit that day. Maybe we'll lose a little bit of basis points. If the Feds do drop it a half a point, there's a great chance that we could see a little bit more room and improvement because that will actually impact the 10-year Treasury, which would then actually impact the 30-year mortgage bonds. So I would stick on the fact of, yes, Jerome Powell is going to lower the interest rate, the Fed is, and yes, I think it's going to be 0.25%.
So best case scenario, if that does happen, so basically you're probably going to save probably about 1/8 of a point, right? Am I correct? If you are going to get a loan? Because
mortgage-wise, they could stay flat. Again, we've already dropped our rates. We've already seen over 200 basis points of improvement in the last 4 months. We're at better interest rates than what we've had since September of 2022, which is huge. So if we drop it a quarter, the Fed rate, we'll probably see mortgage rates stay pretty flat, maybe even get worse a little bit for a couple of days. If we do drop it a half, there could be some room for improvement overall in the overall markets, and I would say we might see an 1/8 or a quarter of improvement.
Because right now I have a lot of buyers out there, and I'm sure there's a lot of agents out there that are talking to buyers, and a lot of buyers are just sitting on the sidelines, and they are just waiting for September 18th. But what you're saying is that this is really not going to impact the market by much. It's more psychological than anything. Is that correct?
That's correct. And I think it's just really, they want to hear from the powers that be that the market's headed in the right direction. What I can tell everybody, it's really interesting.
Yes, please do.
That the 10-year Treasury actually left its inverted yield yesterday and went into a verted yield yesterday. And that is a very big radar. We have seen every time that this happens that we do enter into a recession.
Yeah, so what you're saying is for the audience, typically when you see inverted yield, that's a sign of going into a recession if you take a look at historic, right?
When you come out of the inverted yield into the verted yield, yes. So when you go from the red into the green, every time it's done that, we've entered into recessions 4 to 10 months out. Now, recessions aren't necessarily bad.
Yeah.
They can be really, really great for the economy. We can see mortgage rates drop. We can see cost of financing drop. The downside to that is we probably will see some labor cuts, some job cuts. So, really depends on how the job reports continue to go. However, I kind of look forward to a little bit of that adjustment because we're going to have more affordable pricing for home financing overall.
So we have about 57 days left for the election. How is this playing, and affecting your buyers and also the industry that you're in?
There's definitely going to be some type of shift depending on who wins this election. I'm going to stay pretty just neutral out of any of the political conversation. But I think that we need to vote with business in mind, like what's best for business, what's best for our personal finances, what's best for our balance sheet. I've seen, there's a lot of pros and cons to that, but I definitely think that the election can impact housing for many years to come, depending on who's elected.
Yeah, I just feel like a lot of buyers right now are really just like sitting on the sidelines, and they want to wait until September 18th to see what happens. Also, they want to wait for the election too as well to see what happens. And it's funny because you got both sides. One side is like, a recession is coming, the market's going to crash. But then on the flip side, I look at the market, right? And the market is still healthy. Things are still moving. I mean, we're not closing as much. And I'm going to be honest with everybody. I'm not making the kind of money that I used to 1, 2, 3 years ago, but I'm still making money. Things are still moving. We're still surviving. And believe it or not, home pricing is now at an all-time high of $485,000. It's just, it's a very complex market out here. Some markets, depending on the zip code, the style of the home, it tends to sit on the market for some time. Then some of these homes, they just go like so quick, right? It's like 1 week for myself, I feel like there's nothing going on. The following week, I'm just like super slammed and busy. It's a weird market on my side.
It's not just you. I have to say I feel those same reciprocals. Yeah, it's definitely a different market. And I mean, what do you think is causing that? Do you think it's doubt? Because I mean, I look at it and it's like people are waiting for the feds to say something.
Yeah.
So you're waiting for somebody that you don't know, that has a lot of money, that's an attorney that shouldn't even be in an economist position to speak on what their thoughts are for you to take control of stepping forward and doing something for your life. See, I don't think it's about timing the market, Chuck. I think it's about time in the market.
Yeah.
And so as I
like
see,
that.
Thank you.
That's a good, I'm going to start using that phrase.
And so I really think that, like, if you really look back at anything that was bought, whether it's your mom, your grandma, whether it was you 20 years ago, you know, what did you buy your first house for? And then what's it selling for today?
Yeah.
And so a lot of that, and then I look at some of my investments I've made. I mean, it took me making an investment in 2000 and I bought a small condo in 2012. I actually did an owner will carry.
Yeah.
Gave the lady $5,000 down, and I brought her $4,800 a month for 10 months or 9 months. And then I think I had a small balance due. But it took a lot of grit for me to go and buy that after I had lost everything. However, me taking that little bit of inertia and grabbing that and then holding it, I held that property until 2019, and then I sold it.
Yeah.
2019. And then I turned around and was able to take that money and move it into another investment out of state.
Yeah.
And so, it wasn't about timing the market. It was about the time in the market and that investment, initially of believing in myself. And then I go back to the decades of real estate, Chakits. And if I look at real estate, it has just grown immensely. 70s, 80s, 90s. I mean, 73 to 83, housing tripled. 83 to 93, housing doubled. 93 to 03, that's probably the slowest like window we had. I think it was about a 30%, 27% gain. However, if you held on till 06, it doubled again.
Yeah.
And then we had the Great Reset. And then if you look at like 11 to 22, we went from $114,000 in Las Vegas to $425,000 in 2022. So in a 10-year period, we tripled again. And so, you know, when I look at real estate as a whole, and then I look at markets, Vegas is not oversaturated. And so, you know, you've got a lot of cities that have 4, 7, 8 million, 11 million people in them, and they're oversaturated. They're just, the traffic's there. Vegas is, we're
still new.
Yeah, we're new, and we're turning from a small town into a big city. We finally have our world champion hockey team. We finally have our NFL here. Now we're going to bring the Major League Baseball here. You know, what's next? And, you know, don't forget about our women's basketball championship too, as well, the WNBA. And so you can't have us playing Denver and our house prices aren't the same.
Yeah.
You can't have us playing Miami. Obviously, that's a little bit of a different market. They're going to probably be higher for us for a long time to come. But, you know, you get what I'm saying? Like, we can't be playing these bigger cities and not have that same value. You know, Los Angeles and Vegas, they're going to build a train, Brightline. I really believe it's going to show up, Chuck.
I hope so. They keep talking about it and they keep changing the entity. So we'll see.
So, well, here's the thing to look at is Brightline is in Florida, and they've already built the Miami to Orlando and opened it up. You can actually ride it, touch it, feel it. They're finishing the Orlando to Tampa, and then they're going to take all that equipment, drive it across the nation to Texas, or across Texas and into Nevada, and they're going to start building. So what happens when we have a high-speed train from Las Vegas to L.A.?
We're bringing in more money.
And what happens when the person that's making $185,000 in LA figures out that they can hop on that train, come here and live, and they only have to pop in once a week at their office? They're going to come out here and live. So it's really interesting to see where Vegas is heading. But I think Vegas is for the taking in a sense. I mean, when you look even at luxury homes, and you know, you look at a 1.5, $2 million, $2.5 million home. That same house is selling for $4 million, $5 million in Idaho.
Yeah.
We don't even have to go into major like major cities. We can talk about states that aren't necessarily on the map that have higher values than our luxuries. So I think there's a lot of growth opportunity here in Las Vegas.
So talking about growth opportunity, how much longer do you think we have until we actually cap out at this point? Population growth.
When do they change the American dollar? I mean,
well, here's the problem is like,
I was opening a question. So I was like, you know, I had to kind of like,
well, the problem is that how much home pricing can go up. We only have certain amount of land that the federal government will release to us, right? How much more homes can you build? And our population is about 3 million. How much more people can you actually fit in this valley? Eventually, it's going to become like California, right? But again, it's going to top out. The question is, do we have another 5 years? Do we have another 10 years? What's your thoughts on that?
I think affordability of housing is almost gone. And I think that, we can talk about that, how we need more affordable housing, but all the affordable housing that's being built is by mega corporations and landlords that are planning on just keeping that lower class in renter life forever. So, I mean, if you're not, I think there's a huge separation between upper class, middle class, and lower class. And I don't even know if there's a middle class anymore.
Yeah.
And it's very interesting because we see a lot of apartment buildings being built. Matter of fact, right over my house, there's a Smith's. And for a long time, I was like, what's that? What's going to be on the other side of the Smith's?
Yeah.
That's going to be such a great shopping center. And they are literally building apartments where I thought there would be a shopping center for years. And so high density housing is being built everywhere, and it's not being built with the intention of selling it or having people actually build wealth with it. It's being built to literally house people. And so I think there's a big separation. And honestly, I'm really concerned if, the government really wants people to own a home. And, I think that it comes down to, where does the max out come? I think it comes down to, where does the wages stop? Are we gonna get the wages that we need for more affordability, or are we gonna continue to keep these wages kind of trapped? Because if you look at inflation overall, and this is gonna be kind of a little contradictory or a little, it might cause some contention with people, but if you look at where housing and car prices have gone from the 1972s to now, minimum wage was $1.66 in 1972, and it went up to like $3.55. Yeah. Well, the barista right now, minimum wage right now, if you were to keep up with the times of that, we should be at about $56, $58 an hour.
And that's all just caused by inflation. And I think that's the reason why home pricing are where they are at today, is because we keep printing more and more money. And I think this is where a lot of investors and a lot of people that are really leaning heavy into real estate because of inflation, and that's the reason why pricing just keeps going up due to inflation. So the problem is that if you buy and you hold for a very long time due to inflation, the good news is that once the company that you work for, let's just say, you work for some sort of tech company, now you're making only $150,000, you'll be able to pay off that home a lot faster later on down the line, because you'll be making more money later on, because wages has to keep up with inflation. But the problem that I see here is that the average household income here only makes about $78,000 to $80,000 a year, and we have home pricing now at $485,000. That is like, they're pretty much maxed out at this point. And at $485,000, I mean, the homes that I'm looking at,
they're maxed out at the current interest rates.
Yes, that's true, which is, I don't think the feds are going to ever drop it down to 3%. I think there's like no way they could actually just drop it where we actually have a mortgage now at 3%. I think that's gone. Now, I think we have to get used to the, maybe high 4s, mid 5s, and I think that needs to be everybody's comfort level.
Absolutely.
But the problem is, again, people that live out here with the average household income, it's very hard to get a home. It is not easy. And I'm going to tell you, 95% of my buyers are everybody that's from out of state. They're cashing in on their home. They're coming out here. They're paying cash, or they're putting a big chunk down. Matter of fact, I just spoke to a gentleman today. We're looking at a $700,000 home, but I mean, he's putting down $600,000, which is insane, right?
Absolutely. And I see a lot of people moving here with a lot of money. They're selling that bigger, higher payment that they were carrying. Let's say you bought a house for $1.2 million in Northern California, and it's a 3-bedroom, 2-bath, no AC, 50 years old, and you were working remote now because of lifestyle changes that have happened in our life over the last couple of years. So you can literally sell that house, take your money and move here, and cut your bills in a quarter, maybe even more than half. And so that's a beautiful thing. And that's one of the, I think, benefits of Las Vegas, Nevada, and the opportunity here is that you can really position yourself to help yourself build some financial wealth and help your family build some wealth.
So what do you tell all the people that live out here that, got kids, currently renting, but they want to have a home, right? They're thinking about getting started to purchase their first home. but they just don't have that much money. They don't have, enough to get, their skin in the game because, people got bills. You got 2 kids, you probably got 2 cars. Both parents are working, right? They're barely scraping by. They only got $5,000. What do you tell that person? How do you help them out? How do you help them get a home?
Well, if you make underneath $70,250 a year in Las Vegas, Nevada, I can actually get your down payment covered at 0% interest, 0 payments for 30 years. That's a 3% down payment covered for you. It's a 3% or 97% conventional loan. Mm-hmm. And so what you have there is you have the opportunity to kind of buy now, pay later, get into the house, build some wealth. And then as rates continue to drop, we can maybe consolidate and refinance those together. Even if rates didn't drop, you have 0 payments, 0 interest for the next 30 years on this. That's being issued by one of the best banks in America. Not every lender has it, so it's not available at every single bank. So I think that's a number 1 product. Number 2 product, I've got some down payment assistance options for people that do not fit in that income parameter, except they're going to pay about $200 to $300 more a month than if they had their own down payment. Mm-hmm. And so I start to really look into, do you have a 401k? Let's tap into your 401k if you do and use that as your down payment, because let's be factual. Most 401ks, especially if they're under $100,000, they're not making a lot of money for people right now. Yeah. And so let's take that money, reposition it so you can make a lot of money and be sitting on $40,000, $50,000 of equity in the next couple of years. And then the last option I'm going to look at is, do they have the ability to get a gift? Or timing's everything. What'd you get back on last tax return? Yeah. Let's use that plus your $5,000, and I'll have Chuck get you a seller credit because he's a master negotiator, and let's put this deal together. So there's lots of options. There's lots of ways to make it happen. There's lots of ways to skin a cat, they say, right? Yeah. And so I think it's just a matter of that teamwork where me and you come together and collaborate on what needs to be done to help this client get the keys to their home and make their dreams come true. And so it's just a matter of numbers for that. But there are some options out there. There is down payment assistance programs. And, you are going to save, though, typically if you can muster up your own down payment or put it together with a partial here and a partial gift and some of your tax return.
Now, for some of you guys are not aware, I've been friends with Josh now probably for, I'm going to say maybe 15 years. We've been doing business for a very long time. And what fascinates me about Josh, him and his team, they move very quickly. And this is kind of the crazy part. There's some transactions where I go through the whole process with you, and you're like, we can close already, we can close. I'm like, dude, you're moving too fast, which is kind of fascinating. How are you able to close these files so quickly? Do you know what I mean? Typically, it takes a lender 25 days to 30 days to actually close these deals, but I mean, you're wrapping it up within 14 days. Sometimes some of our deals are within like 7 days, and I'm like, dude, you just like crushed it, and now you're just sitting idling, waiting on us, which is kind of fascinating to me.
Well, thank you, Chakits. I guess it's pride of workmanship. I've been doing this for 24 years. I've had plenty of, wow, that really hurt my head to try to get through this, to finish it. And so, I think I really just focused on like, what is the client experience and how can I improve on it? Yeah. And how can I simplify this for them? Because let's face it, you wake up this morning and you're laying in bed with your wife, Chakits, and you're like, hey, honey, I really like this house. You're on realtor.com. What do you think? Should we buy this? And you've been looking, man, this $800,000 house is perfect. Nobody woke up this morning looking at mortgages going, man, honey, look at this beautiful mortgage. Yeah. It was the kitchen or the backyard that got them. So, I'm not the guy that like, hey, let's call Joshua. We want to get an $800,000. So, yeah. I mean, I think the thought is that if I can simplify the process and if I can put the work in up front, and make it easy for people, then they're going to want to do it again, or they're going to want to tell their friends. Yeah. And then we can get past the stigma that it's really hard to get a mortgage. Yeah. However, there are checks and balances, and you do have to have your finances in order. You have to have your credit good. You have to have your job history good. However, I think that a lot of loan officers actually don't start working on a file
until you're under contract, which
until you're under contract.
Really pisses me off. And I think that's the reason why a lot of agents, right, for all the buyers out there, they always say, hey, why don't you talk to my lender? Because they've been doing business with them for some time. And what happens is if my lender says you're solid, I know you're solid, versus going a different direction and using a different lender. And this has happened before on one of our files where the client decided not to use you. They went with their lender. And this is a banking institution. And I know how banking institution works when you have a pod, and that pod, you have an underwriter that's on the East Coast, and basically your file's based upon whoever's in queue. And it's not like you can't walk over to the file and say, hey, I can get this done. The problem with that is everybody kind of takes their time. You got to understand with these bigger banking institutions, right? They're doing so many files. Like, they don't care if you have a timeline. It's based upon their timeline. And I literally went through this whole nightmare with this one bank with this client. And it's just like, dude, I should have just used my lender, and here's why. But at the end of the day, buyers are so focused on interest rates other than the performance on the lender. Why is that?
That's interesting. I think it's just a consumer focus. They want the lowest payment. And so they think if they can find the lowest interest rate, they can get the lowest payment. Mm-hmm. I think that overall, though, some people will choose speed over interest rate.
Yeah.
And I think that's a big deal, like guarantee and certainty. However, I've kind of cut out the middleman. So I know my interest rates are fire. I don't have to battle unless it's somebody that's one of the A players like me. Mm-hmm. And I think that, it just comes down to checks and balances. Yeah. Like, I have a system in place, and I check mark every time. I check the same little check mark. And I think with the big institutions, I'll see a buyer and I know they're heading into a condo, and I'm going to tell them, you have a condo check. You have to get approved for that. You could be the perfect buyer, but this property might not check out for you. Yeah. And I'm going to find out in the first 8 days if that property's going to check out for you. Mm-hmm. And it's because I have a checklist, and the second that contract comes in, I'm like, check. Oh, condo check. Oh, wait, let's get the condo checklist out now and do the checklist for the condo. So I got checklists for my checklists. Yeah. And then it's just a matter of, making sure that you check mark or check each item and really kind of cross your T's and dot your I's. And then I have a couple other secret sauces. I know how to pull income very fast on people, and I'm trying to get to a digital era where I don't have to ask for pay stubs and W-2s from people anymore, even though I still ask for them. Mm-hmm. But I'm getting people's verification of incomes done in the first 48 hours that they get pre-approved. That is not insane. After they're in contract 7 days. And then the reason for that is because I have a lot of respect for all realtors. Yeah. Not just the buyer agent that's working for me, but the listing agent. I think about how much time that person that listed that property, how they had to meet with them, take pictures of them, stage it, get it ready. And if I don't show up and take care of that part of my job, I'm letting not only the person that I do business with down, but I'm letting another partner in my business, another industry compadre, I'm letting them down. And so I really think that, a lot of what drove me to build the systems that I built is because I don't want to let anybody down. I want to be reliable, accountable, and I don't want somebody's hard work to go down the drain because I missed one piece of paper. And so I think it comes down to that. Just, there's a lot that goes into loans, and as an officer, I have to check all the papers and balances. And if you miss something or didn't fill out your disclosure correctly, it's like, let's step over to the side so we can review this for you. But I really want to be the officer that's like, oh, you have access into the gates. Come on in. You checked your paperwork right. And so I think just developing the systems and the process and having a lot of attention to detail is something that is part of my secret sauce of making this happen for people at a very fast and quick rate.
I remember there was a client that we were working with. I think we just closed last month. Quick shout out to Frank Canada. He's probably watching this video. But we went with the builder's lender. Couldn't get it done, right? And you were able to get it done.
Yes, sir. The Canadas are amazing buyers, by the way. And really thankful I got to meet them. They're great people. Mm-hmm. So shout out to them if they are watching. Yeah. But yeah, I actually just got done another deal from a builder. Unfortunately, and this builder's loan officer, I actually knew him. It was really funny. The agent called me and was like, hey, I got a deal. Can you look at it? And he's like, yeah. He's like, I'm going to bring the loan officer to the line. Will you be nice? And I'm like, yeah, I'll be nice. Like, of course. I was like, oh man. So And so we get on the phone, and the second we get on the phone, he's like, yeah, this is my loan officer, Joshua Nieves. And I said, hey, how you doing? And the loan officer was like, this is Joshua Nieves? Like, Joshua Nieves, how have you been? And it turns out that I worked with that loan officer and trained them at D.R. Horton back in the day when I worked as a builder.
Oh, that's strong.
And, you know, and he was like, man, I can't do it. And I literally took the deal and closed it. And it was just a matter of like, I think 7 or 8 days that I was able to get it from application to clear to close. And so it's nothing that I do differently besides, again, my pricing's really good. My mortgage insurance is some of the lowest in the nation. So if there's a builder that's running a deal and they're running mortgage insurance that's higher than me, plus I look at files differently and I look at income differently, and I have a lot of knowledge. So anytime I come across a loan officer that works for the builders, sorry, loan officers, if your license number is 1.75 million or higher, they're not even competition because I've been in this for so long. You know, I have a 557,000 license number and we're issuing 2.3 million. So, yeah, it's just that attention to detail, Chakits, I think. And I just take a lot of pride in what I do, and I want to help people.
And I think this is also important as far as building a dream team, because once I send you over the client, there may be certain contingencies involved, especially on the financing part. And we have to structure the deal in order for them to get the property. So one of the things I ask you is, what's the debt to income ratio? What can we max them out at? What do we have the property taxes at? What do we have the HOAs at? Because we could be looking at a property and they won't be qualified for it. Or I may be looking at a property where we're kind of starting to redline it, but then I'm able to reach on out to you because we know what the numbers are. We can tweak the numbers a little bit in order for them to get financed. Some of these deals, we have to structure it where it may be contingent upon a sale, but we can maneuver the file to the point that it benefits them. So sometimes we work this file, but the most important thing that people have to understand is it's not only the agent, but it's also the lender too as well, and it's also the buyer. Those are the three main components, and communication is the key. Because if you structure it correctly, we can actually get you a home, especially if you have more of a complex file, right?
Absolutely.
You like how I just promoted you?
I'd love that. And I mean, honestly, I like to re-promote you back.
Yeah, you don't need to, bro. This is about you, bro.
Yeah, but it's just awesome. Like, that thought process of, hey, what is the DTI? Where can I max them out at? Yeah. That's what I love about working with you, because you're looking at how you can get the best for the client, how you can maximize everything, and making sure that they get that fourth bedroom or that house with the pool, because $20,000, $30,000 can make a big difference on a house.
Yeah.
And what you were going to call your home. And so I love that about you. I love how you really dive into, like, are you maxed out? Do you have any more room? And honestly, I do a lot of pre-approvals, not based on an exact number, but on a range of number. You're between 440 and 470. Depends on when your house was built, the tax bracket, the HOAs. I also target more of my pre-approvals based off of what the client's ideal payment number is.
Yeah.
Not what they qualify for.
Yeah.
Because I could come across an individual or a couple that can qualify for a $4,400 house payment. They may only want a $3,200 house payment.
Yeah.
So if I don't ask that question of what is your budget, and if I don't tailor to that, so that's a great question. And oftentimes where you're like, is there any more I can squeeze out of this? And I love that about you, because you're not squeezing it to necessarily try to push their sales price up.
It's to get them the home that they want.
It's to get them the home that they want or they need. Yeah. That's going to last them. Because, I mean, let's make it factual. I say this to everybody: buy the Lexus, not the Toyota, when you're in real estate.
Yeah.
If you buy the $400,000 house that doesn't have the pool and is only a 3-bedroom, but you really need a 4-bedroom and a pool, you're gonna be with your spouse in 2 years buying that house at $480. And then you just cost yourself how much money in moving fees and costs. So I love that about you, how you push people to get the best home and find that maximizing for them.
So Josh, I know we are coming to an end here. What's the best way to get a hold of you, especially with all your new loan programs that you currently have available?
You can call me or text me at 702-580-5069. You can always direct message me at the Home Loan Closer, at the Home Loan Closer. and we'd love to help you out with anybody scenario-wise. If you guys are looking to refinance, we can talk about saving you guys some money. If maybe you need some cash out and you want to consolidate some debts, I can help you out with that. And if you're looking to get home fast, I'm your guy to help you out with your purchase and the best loan for your home.
Josh, I really do appreciate it. All right, guys, that's pretty much for this video. If you guys have any questions or concerns, want to get more information regarding loan programs, I will have a link in the description below. Also, if you guys haven't had a chance to subscribe to this channel, go ahead and click that subscribe button. Also, don't forget to follow us on Instagram. Other than that, until next time.
Hey, what's up, everybody? Did you know that 96,000 people move to Las Vegas every single year? The question is why? Well, due to the Fed's interest rate hikes have increased the cost of living for many Americans across the country. Americans are now looking to relocate to Las Vegas because of no state income tax, low unemployment, low cost of living, and affordability for housing. We're also the entertainment capital of the world. So if you are thinking about relocating to Las Vegas, we would like to offer you a free Southern Nevada market report and a relocation guide. All you have to do is click on that link below to claim yours today. Does your house look like and have you been considering remodeling your home for some time now? Well, if you love real estate like I do and appreciate the attention to detail in the craftsmanship required to build a remodel or a gorgeous home, then I got the perfect company for you. Guys, I highly recommend Design Zone Remodeling. They are a stellar company that will turn your outdated home into your own personal sanctuary. They specialize in bathroom remodels, kitchen remodels, and full house remodels. Design Zone Remodeling has a reputation for excellent workmanship, competitive fees, and being able to offer a wide range of services and deliver the outstanding results to their clients. I use Design Zone Remodeling on my personal properties. Give Design Zone Remodeling a call today at 725-223-0871 or visit their website at designzoneremodeling.com to request a free consultation today.